Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Tuesday morning, we're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, morning.
Hi, morning, folks. Again, the rally continues to roar in different parts of the world. I mean, Wall Street, everyone's talking about the Nasdaq, and in Japan, the Nikkei hitting that psychological mark of 40,000. So it's up and away for equities. Hopefully, we participate.
Yeah, let's hope so.
Well, let's just take it from the top then, right? And, in terms of news flow and updates with regards to India, US, there isn't very much. I mean, it's not what happened last night what I want to focus on, but what did not happen. And I think that also is a sort of important indicator. So, that virtual summit, BRICS meeting from yesterday, that took place. So you had President Xi from China, President Putin from Russia, South African leader, all attended remotely. Prime Minister Modi did not attend. There was S. Jaishankar, the External Affairs Minister, who essentially represented Prime Minister Modi in India in that virtual meeting. It's to me, that seems like a bit of a signal. It's like a pragmatic diplomatic move to kind of sort of maintain a balance between, of course, President Trump, with who, Prime Minister Modi exchanged very warm back and forth over the weekend. And of course, at the same time, very much being part of the BRICS as can be seen by the comments which came in from the External Affairs Minister, S. Jaishankar, who attended. So that's what I wanted to begin with. I mean, it's not comments from some of the top officials of the Trump administration or this or that. I mean, essentially, this is one more kind of step. I mean, the first overture was made by President Trump with those comments hailing Prime Minister Modi. Prime Minister Modi sort of responded warmly. And then you have this. I mean, this was a long-planned meeting, a virtual meeting, and Prime Minister Modi essentially absent, being represented by the External Affairs Minister, S. Jaishankar. So the recognition is there. Maybe you need to sort of, de-escalate step by step in that sense. A little bit of give and take at the same time. Now, I'll just go to the US markets and where they finally ended. So S&P was up about a quarter. Nasdaq was up about 0.45%. So equity markets doing well. The 10-year yield lost 3 basis points to around 4% or so. Dollar index, sharp move lower. I mean, I think that we were talking about that trend line all the way from the lows of the global financial crisis. We are slightly under it, still around it. 97.4 is where we kind of left off. You had the New York Fed survey. One-year inflation expectations have ticked higher, but it's a record low in workers' confidence. I mean, essentially, if they lost the current job, how confident are they in finding an alternate, a new job? And the answer to that is at a record low. Markets, by the way, fully pricing in a 25 basis point cut now on the 17th of September, which is next Wednesday, which is the FOMC meeting, which is due. Well, will we see at the margin 50? We don't know, but 25, I think one can work with. Oil prices up a little bit, $66 a barrel is where we are at. Now, just tying in the levels, yesterday, of course, once again, for bulls who were hoping for a bit of a strong closing. The opening was strong, a strong closing. I mean, they were in for a disappointment because the market sold off, ending just about 50 points higher in the Nifty. So the breakout above the falling trend line is the same level we put out yesterday as well. Roughly 24,980, 25,000 is a break above this level. Essentially will confirm further upsides in the near term. So keep that in mind. And 24,522 is the low that we saw. And I think as long as the market stays above it, I think hope that the market continues to see some repair and recovery will be there. Bank Nifty support is the low of 53,561. And here, the 20-day moving average, the 40-day exponential moving average, both come up on your screen. 54,772 and 55,177 are those particular levels. So GIFT Nifty gives you a quick sense of how we're likely to start, another 70-odd points higher. So the opening is going to be good. But through the course of the day, will we be able to maintain the gains and build on it is the question, which has been a bit of a problem lately. But F&O stats, how is the setup? Nigel is standing by. Nigel, over to you.
Well, institutional participation actually has been a little bit softish if you look at the gross volumes. However, what's been the trend is the DI is buy, the FI is sell. And net, actually, the institutional numbers are positive. So that, I think, was par for the course. What did the FIs do in the index futures, though? No big short covering is what we saw. They continued to add shorts, but yesterday they added equivalent amount of shorts as well as of long contracts. And in fact, now the short position continues to hold at around 82%. But one positive we have to look at is the way the short positions have getting added by the FIs, and actually they're not getting follow through. So just take a look at that. The short positioning was at around 1.7 lakh contracts. That's holding at around 1.92 lakh contracts. So effectively, the short positioning has moved up by around 20,000 contracts. But if you look at the Nifty, that's not worked in their favor because the Nifty actually is mildly higher. So the FI shorts that are actually getting follow through in that entire pullback from 25,500, we pulled back to around 24,500. Now they're not getting follow through, which in the sense is a positive actually. Market may not go up, but if the shorts get piled into the system and the markets don't move down, then they're going to get stumped on the wrong side. So that's an important data point. But today is a Tuesday. So yet again, we are bracing for the weekly expiry on the Nifty itself. So these strikes become important. 24,900 call, 24,800 call. Good amount of open interest built up out there. And that was writing out there because on these strikes, even when the Nifty moved up, we did see there was erosion of premium. So that's going to be the important marker that you're going to be looking at. Call writers believe they've got this covered on the upside. On the downside, the 24,700 put, that has seen a fair bit of open interest build up and the premiums around 25 rupees. So which brings us to the levels. If we're looking at the levels on the Nifty, resistance going by the options data for the day, 24,950. Downside, 24,600 becomes a support level. But that resistance zone is at around the 24,900 to around 25,000. I say this because that's where a couple of technical indicators come. In the last couple of trading sessions, we have gone to that band and from there we have pulled back. So 24,900 to around 25,000. That will be the important resistance mark you're looking at. The Nifty Bank, the good news is at least in the last couple of days, it's performing in line with the Nifty after underperforming. The 20 DMA is the important mark you're looking at on the upside on the Nifty Bank itself. So that's the mark that you'll want to watch out for on the Nifty Bank. You'll want it to get closer to that mark and hope for a bit of a short covering bounce. That's a good 400-500 points away from current levels. Tech, though, is likely to support because Infosys could hold its ground. So that we'll get some kind of support coming in from there.
Absolutely. Infosys is definitely, in terms of news, definitely the stock of the day in focus, considering it's looking at another buyback. And we'll talk more about that as we go forward. Just a quick glance across Asian screens, mostly higher. The key markets, for instance, Hong Kong up about 1.5%. Japan, like I said, has been roaring. The Nikkei hit the 44,000 handle earlier in trade because the expectation is with political change in Japan, the successor to the Japanese Prime Minister would perhaps be more reform-oriented, would look at more stimulus, and that's been driving the Japanese market. But the other regional markets as well. It's a really good-looking green screen across Asia. Now, where does this leave us and how is India poised? Well, let's take that question and more to Ed Clissold, Chief U.S. Strategist at Ned Davis Research. Ed, thank you very much for joining in. Good to have you on the show. So I first want to start off with how India is looking in terms of the geopolitical upheaval, the tariff, and what seems to be a slight softening, at least at a personal level, a slight softening of stance between Prime Minister Modi and President Trump. What's your sense? I mean, how the market has weathered the entire tariff saga?
I think that the market is started to learn that a lot of the discussions and the rhetoric, particularly when it gets particularly difficult, is something the market can move beyond because eventually, behind the scenes, cooler heads will prevail. Certainly on the U.S. side, that's what seems to happen. President Trump has a certain type of negotiating style, which tends to be aggressive and then walk things back. And so that's a lot of what goes on. And the fact of the matter is, the Indian and U.S. economies are linked very closely, and they both need each other. So at the end of the day, we're likely to find a solution that is still palatable to both sides.
Mm. In the meantime, the market rally in the U.S. continues. There's absolutely no stopping. So what's the sense? I mean, this month it's going to be 25 basis points from the Fed. Is that being taken as a given? And therefore, do you expect U.S. equities to keep going higher?
At this point, if the Fed does not cut, it would be a pretty big shock to investors. If Powell wasn't planning on leading the Fed to a cut, he wouldn't have said what he said at Jackson Hole last month. So traditionally, when the Fed has cut like it did last year and then waited or paused for more than 6 months like it has, the restart of the easing cycle has been bullish. So if you were to line that up, say the 3 months before to 3 months after, which roughly lines up to the second half of 2025, the S&P 500 has risen about 14%. That's not a forecast we're making, but just tells you historically the restart of these easing cycles has been bullish for stocks. And you think of the reason why, yeah, the Fed paused the easing cycle for a reason. Maybe inflation was getting a little bit hot. Then inflation comes down and the economy is probably in okay shape. Otherwise, they would have probably started cutting sooner. So kind of a Goldilocks environment of inflation coming down, the Fed easing, and the economy doing okay.
Ed, hi, morning. What kind of, from a global investor's point of view, who invest not just in the US but around the world, what are the big themes that they are looking for? AI infrastructure, etc., has been a big winner. We've discussed here in India on this program whether the absence of big, clear AI kind of themes it also hurts, the market here in terms of attracting flows, or has it? But it's just a point of debate, food for thought. What's your sense, Ed? The big themes which will do well?
The AI theme seems to still have a few more legs. There's going to be some pauses along the way, which we've seen in the U.S. for the last month or so, amongst some concerns that maybe the stocks have had too much of a run. But as long as they're producing superior earnings growth, or superior sales growth in a world that is starved for growth, those stocks are likely to be the winners over the long run. Now, the concern is eventually they're going to hit a wall where they're not going to produce the kind of earnings growth they had been, and their multiples are going to come down, and that'll be the rotation. So AI is a theme that's still out there. One thing we've been watching closely as well are small caps in the U.S. They've hit pretty critical support. Small cap versus large cap is back to where it was in 1999. At the height of the dot-com bubble, small caps are cheap. Now, usually they do better coming out of a recession, so probably the best time to get into them is after the next recession. But if investors want to start dipping their toes in to see if maybe they find support here, that would be something else to look for. But the third thing I'd say is globally, find the companies that can produce superior top-line growth, sales growth, because in a slow growth world, investors are going to pay up for the companies that can produce the growth.
Hi, Ed. Good to see you on the show. My question is with regard to the U.S. market and the U.S. economy. Now, valuation-wise, it's trading at elevated levels. If I look at the S&P 500, ballpark 25, 27 times, depending on what earnings you're factoring in. And the economy is going to be hit by a double blow. I say this because tariffs are moved up, and also you have the dollar that is actually weakened. So it's unlike the last time around where you saw strength on the dollar. So the consumer ultimately will get hit. Do you think that the US markets have now done their run, and maybe in fact it's time for some kind of cool off in the mother market? Or do you think the US markets will continue to lead the way?
Well, as long as the economy avoids a recession, you have a friendly Fed, and you have decent earnings growth, that's a recipe for the cyclical bull market to continue. Now, can you get a pause, a pullback? Absolutely. On average, the S&P has one correction of 10% or more in a given year. So those sort of things can happen. But if the big macro backdrop of positive growth, good earnings growth, and a friendly Fed is there, then I think that the Fed or the U.S. markets will be okay. The valuations are a concern, but those generally are not the catalyst. They tell you the risk. So when eventually the economy does slow down, and there will be another recession, probably the decline in the markets will be that much greater because you're coming off of such high valuations, unlike say a decade ago, when valuations were much lower. We got a slowdown in the U.S. in 2015, 2016, and you got a pretty small bear market. This time, whenever the next recession hits, it could be much greater.
All right, Ed, thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC-TV18. Well, what we're going to do is quickly run you through the interactions which are lined up here over the next 2.5 hours. We'll have We'll, of course, talk about the Infosys buyback in some detail at 8:35, so stay tuned for that. 9 o'clock, Jyoti Gupta comes back from Nirmal Bang to discuss the outlook for the defense sector as India prepares a 15-year defense roadmap. 9:20, Sandeep Bhatia of Macquarie Capital is a market master of the day. He's been cautious. 9:35, we'll have the management of Muthoot Finance coming back on. We, of course, spoke to them post the earnings and, of course, I think mid-quarter ones as well. We'll discuss the company's outlook for this particular quarter and beyond. Management of Prudent Corporate Advisory, stocks done very well, joins us for a chat at 9:45. There's a transaction which we will address. Special segment, it's the economy. 10:15, Lata discusses the outlook for banks and NBFCs after the recent tax cuts. Suresh Ganpati of Macquarie Capital comes on for that. We'll take a quick break here and we'll just sort of come back with our top list of stocks, top 10 stocks with the research team. Stay tuned.
Welcome back. You're with us on Bazaar Morning Call. And like we've been telling you, actually, Asian markets are doing very well. US handover was very, very positive with the Nasdaq hitting an all-time high once again. And then there's further good news out of Japan, which has been driving the, that particular market over there. So let's see what the implied open is telling us. Yesterday, the bulls kind of lost some momentum towards the end. Let's get the implied open up now to see how we'll start off. The start is going to be positive. The question is retaining it and building on it. There you go. Almost 73 points. That's the kind of gap up that's expected. A lot of interesting stocks in the limelight as well. Plenty of stocks in focus. So let's straight away get to our list of top stocks to watch today. Guys, morning to all of you. And right on top of that list has to be Infosys. And Rima, this is very interesting. When Indian IT services companies have come in for a lot of criticism by not doing something radical enough on R&D, what we are getting is another buyback. So shareholders should be happy.
Well, shareholders should be happy. So the Infosys board has said they will meet on the 11th of September where they will consider a buyback. This will be the first buyback since 2022 when the company had bought back nearly 9,300 crore. And since its listing in 1993, this would be the fifth buyback. Earlier, the company would pay out a lot more by dividends. Then after the rules changed on the taxation front, most IT companies pivoted to returning and rewarding shareholders via the buyback. Now, here it's important to note is that out of the last four buybacks, only the first one was a tender buyback, which means it's done at a fixed price. The last three were open market buybacks, whereby the company says that we will buy back at a maximum price. But invariably what happened is that the actual weighted average cost of purchase for the company was a lot lower. For instance, in the last buyback, the maximum price, the 9,300 crore buyback of 2022-2023 was 1850. But the average price of purchase for Infosys turned out to be 1539. So that's one thing to note, But generally, stocks end up doing well post the buyback announcement. In fact, yesterday, even the ADR rallied 2.5%. But this comes after a period of underperformance. In the last 1 year, stock is down 2.5%. And cash in the books is always very healthy, close to 25,000 crore rupees for Infosys.
Okay, all right. Thanks a lot for that, Rima. So that's going to be a stock that will be supporting the index today. Let's go across to Mangalam. He's here to tell us about Godrej Consumer. Morning, Mangalam.
Good morning. So as other companies are doing buybacks, etc., Godrej Consumer is using their cash and a bit of debt maybe to increase their capacity. And this one particularly is in Indonesia. So they're spending about 250 crores for capex. Their current capacity utilization there is around 75 to 80% already. So they're planning ahead. Takes about 18 to 36 months for the new capacity to come on board. And it's an addition of 15% to their capacity with this investment. Remember, Indonesia accounts for nearly 15% of their sales. So 15% increase in their capacity would amount to nearly 2-3% of sales. So see some mild green out here. But the bigger positive for Godrej Consumer and all the other FMCG companies is heightened demand during the festive season and the GST cuts that have come in.
All right, Mangalam, thank you very much for that. Now let's move on to a block, right? And Nimesh highlighted this yesterday. Voltamp Transformers is what we're talking about. Nimesh, take it away.
Hi, Prashant. So another day, another large block, this time in Voltamp Transformers. The promoters are looking to sell little over 7% stake via block deal. The floor price is 7,600 and the deal size is close to $67 million. But what is interesting is after this block deal, the promoter holding will go below 30%. So it looks like there couldn't be any further selling coming in from the promoters. And anyway, there is a lockup as well between 1 to 2 years for the promoters after today's block deal. So execution could be important. If it's in the block window, you might see a bit of green. But given the discount, if there is not in the block, if the deal is not executed in the block window, you might see the stock reacting a bit negative to start with. The demand could be interesting to watch out for, but a large block, and this probably could be the last block from the promoter entity.
All right, Nimesh, thank you very much for that. So that is basically Voltamp in focus. More on this a little later. So it's from a segment which has done phenomenally well. Voltamp, of course, has as well. Now, IRB Infra, Prime Focus and Good Luck India are the other names in focus. Vivek has got the list. Vivek, morning.
Well, good morning. You know, the operational update coming as far as IRB Infra is concerned. August 2025, the company has gone ahead and uploaded the toll collection revenue as far as this particular month was concerned. So IRB Infrastructure as well as IRB Trust, which is the private InvIT, has gone ahead and posted close to 12% growth as far as toll revenues is concerned. Now, toll revenues came in at 563 crore versus 503 crore. Now, what is it that the company is saying? The company is saying that steady economic activity actually aided the toll collection growth, and this was despite adverse weather conditions that actually impacted traffic across the country. What they're saying, going forward, festive as well as holiday season is actually expected to further boost collections. Prime Focus, remember, you saw a large block deal on Friday. Noted investors came in. Yesterday too, in the block deal window itself, you did see some fund action. So Craft Emerging Fund via two funds, Citadel Capital Fund bought 63.75 lakh shares, and also via the Elite Capital Fund picked up close to 56.2 lakh shares. Who are the sellers? Augusta investors, who are also the sellers on Friday. So Prime Focus, the block deal action continues over here. It'll be interesting to see how the stock reacts today. And lastly, coming to Good Luck India, again some fund action here. Arpna Capital Services sold close to 3.65 lakh shares. SBI funds, you know, the mutual fund arm actually picked up the entire stake, and in fact a little more than that in the via the block deal at close to 1,229 rupees a share.
Okay, all right. Thanks a lot for that, Vivek. Well, swap across to Vivek, to Vinny then. From Vivek to Vinny, she's here with some more stocks in the news. Hi, Vinny.
Hi, good morning. So let me start with the railway name, RailTel. That's going to be in focus. They've received order, and these are several orders, small orders, which are totaling to around 700 crore rupees. This is mainly coming in from BR Education Project Council. So different work orders, 700 crores value approximately is what we're watching out for. Green expected here. Strides Pharma, that's the next one, as they've entered into a strategic partnership for development of expanding nasal spray in the US market. This partnership is with Kinox. They're going to be developing and filing for multiple nasal spray products in the US market. As of now, the specifics of the product is still very confidential, so keep an eye on this one. Hoodco, that also we're expecting green here after the company has signed a memorandum of understanding with Nagpur Metropolitan Region Development Authority. They will be providing funds of around 11,300 crores. This is mainly going to be for land acquisition, development of infra projects in the Nagpur region. Lastly, IOB, that also we're expecting green as the government has extended Ajay Kumar Srivastav's tenure as the MD and CEO of the company till October 2027. So keep an eye out on that.
Okay, all right, Vinny, got it. So we'll keep these stocks on the radar as well. Let's actually recap the list then. The stocks that have positive news around them. Infosys, Godrej Consumer, IRB Infra, Prime Focus, Good Luck India, RailTel, Corp, Strides Pharma, Hoodco and IOB. Voltamp Transformers, the only one with negative news flow, and of course lots of block deals in focus as well. Well, that's the list of stocks based on either block action or news flow, but let's also look at some interesting brokerage notes. Sud has been poring over the reports this morning for us. What's catching your eye, Sudarshan?
Good morning, Surbhi. So two stocks, HUL and NHPC. Jefferies has written on HUL. It has a buy call and target is rupees 3,000. And it says new Unilever CEO is appointed recently has outlined his strategic priorities. And for him, India remains one of the core markets. And he has said not a penny will be spent outside US and India on acquisition. And that Jefferies believes that it has reinforced the focus. And also he has confidence in newly appointed HUL CEO, that is Priya Nair, and it continues to be strong, and medium-term growth is expected to track India's GDP, and Jefferies expects companies to align with parent's growth going forward. Next, NHPC CLSA maintains high conviction outperform call and target is 170. It believes that there is an expectation of stock doubling over next 4 years, and it's an underappreciated and inexpensive net zero play, and decadal green growth was validated by FY 24-29 regulations, and also capacity has tripled. It's gaining market share in hydropower, and even new, faster growth avenues are emerging. So considering these factors, it maintains high conviction outperform.
All right, Sud, thank you very much. Interesting list of stocks as always. We take a quick commercial break here. We'll have Mayuresh Joshi on the other side for some fundamental stock conversation. Stay tuned.
Welcome back. Hope you're having a good Tuesday morning. Well, we've told you about what's going on in the equity markets. For the time being, let's take a detour. Manisha joins us to tell us what's going on in the commodity space. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, the record run when it comes to gold just about continues. We are looking at $3,650 an ounce almost on the charts here. And this is as the markets are assigning more than 90% probability of a 25 basis point rate cut at the Fed meeting. If it's more, then you could be looking at another very strong leg up coming in for gold. But obviously, the tone, the announcement, the guidance is something that the street will be very, very keenly watching for. But ahead of that, it also has to do with the U.S. inflation data that comes in this week. You have the CPI and the PPI numbers coming in on Wednesday and Thursday, and that is where the further cues would come in from. But it's not just gold. Take a look at silver prices. A fresh 14-year highs onto this one, almost $41.50 an ounce for silver as well. Very strong investment demand coming in for the precious metal prices, as you have seen the dollar index continue to decline. It also is extending gains when it comes to the crude oil prices. We've seen 1% of a jump up overnight as well. Well, the OPEC output increase has been quite modest. And then the U.S. president is threatening tougher sanctions against Russia. That seems to be supporting prices.
Okay, all right. Got it, Manisha. Thank you very much for the update over there. We'll keep those cues in mind as well. Let's take the conversation forward and discuss some stock ideas now. Mayuresh Joshi, Director Research at MarketSmith India, is joining in. Mayuresh, good morning. Great to have you on. Autos revved up, and what a rally, right? And who would have thought? It was always, for the last, I think, year and a half, it was only M&M. Everything else was, not working in the system. But now, given the way stock prices have run up, how would you approach the space, Mayuresh, both two-wheelers and four-wheelers?
Morning, Surbhi. So I think there is a sense of optimism in terms of both the GST rationalization, which is expected to spur volumes along with festive demand. And obviously, I think a lot of management commentaries are hinting towards the same. At the same time, I think because of rationalization, you've already seen the first wave of price cuts come across various variants as far as automakers are concerned. And therefore, I think the expectation that the street broadly has is a decent uptick in volumes coming through. With input costs, which have largely stabilized now, the price increases that a large part of the auto universe took in the first half of this calendar year, I think that largely stabilizing would mean margins would also largely stabilize. And that gives a very good perspective in terms of a base case scenario for a solid earnings growth in the second half. Having said that, and you're absolutely right, Surbhi, I think the entire space has probably moved in tandem with all these expectations coming through. And therefore, I think stocks like an M&M or Hyundai India within the four-wheelers is something that we continue holding in our global and local portfolios. As far as the two-wheeler space is concerned, TVS is something that is a clear hold, both in our domestic and global portfolios as well. Margins have inched up nicely. They are expanding their dealer and distribution reach as we speak across the rest of the country. They're looking at a few export markets, and the new launches have been accepted very well by the markets. Let's also not forget Hero MotoCorp, decent set of numbers, the new launch that they've done in the 125cc category, expectations of rural demand coming back might also aid volume growth and numbers going forward. So I think a few of these OEMs is something we continue holding. But auto anchs as a space would be is something our belief and our rating rankings at Markets with India indicate that is one space where actionables still exist. And a few stocks which I've mentioned, something like a Uno Minda, something like an SGS Enterprises, is our belief can continue doing well because the content per vehicle with new launches, expectations of market size increasing, might actually do well in terms of their new product offerings, as well as balance sheet support that both these companies probably offer from a numbers perspective.
All right, got it. Hi, morning, Mayuresh. Good to see you, Ben. What about metals? That's been the outperforming sector of September, right? Normally, high beta, on the downside as well gets hit. But the street believes that China is going to get its act together. In India as well, we have got protection for the ferrous space. And, that's why, in fact, the street is bidding it up. Do you think rightly so?
Morning, Nigel. In fact, I loved your piece that you did on the metals part. I think that was very, very informative and very, very crisp. Having said that, I think, obviously, I think a combination of all these factors are working for the sector as a whole. And therefore, I think the expectations in terms of decent volume growth continuing in the Indian domestic context might play out for ferrous as well as non-ferrous. Obviously, I think the prices as far as LME is concerned still remain subdued because of the overall global demand, and specifically how China is expected to come out of its slumber. But I think the government initiatives, as you pointed out, the expectations of a Fed rate cut, the kind of synergies that India and China are building up with, I think that is giving a good hint to the market that there might be some respite around the corner. However, in our opinion, again, I think we are being very, very selective here. I think in the non-ferrous space, Hindalco is something where ratings, rankings, institution holding as per our cancelling mechanism seems to be on track. Within the domestic space, as far as the ferrous space is concerned, I think JSW Steel looks decent. But again, I think Sarda Energy is something that we continue to remain very, very optimistic about. I think the numbers that Sarda has posted in the previous quarter has been pretty decent. And let's not forget, I think the entire mechanism that Sarda is probably going through, right from a commodity player to probably being more of a power utility player with the SKS Power acquisition, the backward integration through Garai Palma 4 blocks, which will propel the SKS Power acquisition as well. The realizations which have gone up as far as few of the hydro projects are concerned, which are high margin. The energy business itself is a high margin business. And debt equity ratios not being too high, net debt to EBITDA still remains very, very manageable, makes it a very good case from a risk reward perspective. So I think JSW Steel within ferrous, Hindalco non-ferrous, and Sarda is a clear actionable at this point of time.
Another space, if I can just put up, is textiles, which under the radar did very well. So just three names, if you can put the intradays up. Gokuldas Exports was up 7% yesterday. Himmat Sinka was up about 7%. And something like Arvind and a bunch of others were up between 3 and 5% as well. So that is Gokuldas for you. Of course, back in the 700s handle, Himmat Sinka 7 and Arvind, etc., looking higher as well. No news flow per se, and this is, of course, a very tariff-sensitive sector and maybe one of the hardest hit as well. Just some bottom fishing here or something else. What's the sense?
Morning, Prashant. No, so again, I think, as you pointed out, I think the tariff-related issues might still act as a bit of a headwind for these players as well. And obviously, I think what will come out is anybody's guess. So I think if there is some element of resolution that comes through over the next few days, over the next few weeks, you'll get a strong hint in terms of a decent bounce back that will probably come through for this sector, because it's beaten down. Risk reward probably seems very, very attractive at this point of time. However, I think the element of risk is a tad bit higher compared to what might or might not happen. And therefore, I think within this space, I think it's a wait and watch that we're probably doing. If there is any amount of relief that comes through on the tariff front, I think a few players like a Gokuldas as an example, Indocount as an example, which is clearly building up capacities in the US itself. And they've done quite a few acquisitions within the US market to increase their pillow capacities as an example, can be clear beneficiaries, but it's all dependent on a lot of factors.
Right. You know, the other thing I think which we will have to wait and watch, Mayuresh, is the government has been talking about. One is, of course, tariff relief itself from the US. The other is, will the government here, as we've heard from official accounts, do something to help the industry? It'll not sort of restore profitability, but at least it'll prevent the worst outcomes in terms of support, targeted support for sectors, labor-intensive sectors like textiles, etc. I think we had Sajid with us 2 weeks ago, and he said that, well, something should be done immediately. I mean, not wait in the next few weeks. And I think we are within those time frames. So I'm not sure. We'll try and find out if something is coming from the government here. But that was the other chatter in terms of, because, I mean, as you said, who knows what happens on the tariff front. The other one, Mayuresh, just stay with us. We're going to come to you, is Infosys, which has said it will consider a proposal for share buyback on the 11th of September. Sandeep Agarwal is with us, fund manager at Sovelo Investment Managers. Sandeep, good to have you back on the program. How do you think about this at a top-down level before we get into stock implications, etc.?
So, good morning and thanks for having me on the show. So, I believe that, the sector is generating huge amount of cash, and right now there is not enough opportunity for anyone to, deploy that kind of cash. So it is best to, not hold it back and return to shareholders, because the acquisition which are available also, they are very, very pricey right now, and it doesn't make much sense to do any large acquisition or anything. So I think, these are cash generating machine. They keep on generating cash every quarter, every year. So even if some opportunity arises, these companies can very well use that accrual, or even they can borrow for temporarily. So I think there is no other option but to return the cash, and I think they are doing the prudent thing in that sense. And I think all of them will have to do that because the generation is very, very significant.
Sandeep, hi, good to have you on the show. So, I mean, but the thing is that, yes, in the interim, obviously, who doesn't like cash, right? As a shareholder, if you're not getting too many stock returns, the least you can get is either a dividend or a buyback in Infosys' case. But, and we've had this discussion. You have very clearly laid out the reasons why you are negative on a lot of the large IT services companies. But when does that start to change? Surely there has to be a better way of utilizing all the money that they're generating at a time when they're barely growing 2-3%.
So I think what will happen...
Whether it's talent, I mean, you said acquisitions are expensive. It could be getting top dollar talent. It could be incubating some absolutely new ideas. Surely there has to be a better way to use cash when you are simply fighting for growth.
So, the deployment of cash is very, very gradual. Even if you want to build capability, I'm sure they all are trying to do that. And they have always done that in the past. Also, they have caught up with new technology. But the deployment of cash is also very gradual. If you see even Reliance Intelligence, how much amount they are saying, 855 crores, right? So it is not a big amount. These companies are generating tons and tons of cash. So even if they want to invest in talent or anything, I don't think it will cost so much. And secondly, I don't think these companies will suddenly like to change their business model from services to any product or building some LLMs and all that. I think they will try to fit themselves where they can add significant value to the end client, because they also don't want to, get into a direct competition with those big techs, which are big provider of their revenues. And, they both can coexist and do much better. So the only reason I am negative on the sector is that on the large cap, because the PEG ratios are very high. And I think, for at least 1.5 years, the amount of effort which will fall, that can't be compensated with the realization improvement. So I think after 1.5 years, there could be a reset, and we will have a relook at that time.
The last, I think, 4 times that Infosys has done a buyback, it's been through the open market route. So we don't know. We'll see what the board decides this time around, the quantum and the route, etc. But generally, I mean, in best case scenario, that does what? It just puts at least a floor on the stock, because the stock is now barely some 8-9% off the 52-week low. It's fallen 25% this year. So, what's the best case scenario ahead for Infosys shareholders?
So obviously, there are a lot of funds in the world which buy the stock with high dividend yields, and their mandate is to do that. So I think for those funds, it makes a lot of sense to have these stocks. And as I said, Surbhi, this sector, large caps are like, mid-single digit kind of growth story. So if this year growth doesn't come, we have seen low growth last year. So, there will be 1 year, maybe next or next to next, when you will see again 15% growth also. And in that year, you can make 30-40% return. Plus, if you are getting 3-4% dividend yield in form of direct dividends and buyback, I think it makes sense for a lot of people whose expectations are 8 to 10%. There are many funds in the world who are happy to invest at 8-10% also. So I think from that perspective, plus they give a lot of cushion, and it is also a hedge against falling rupee and so many other things. So it makes a lot of sense. And also, as I said earlier, also many people would like to replace IT with FMCG because growth rates are more or less similar, and cash generation and everything are similar. So why not to buy something at half the multiple of something else? So I think those things play out in the favor of this sector.
No, absolutely. And take your point completely. I mean, for all of those reasons that you've mentioned, perhaps large cap IT still has. I mean, it's not a very offensive play. It's a defensive play in the portfolio, but perhaps it still has a place.
Well, indeed. And we had Sandeep yesterday, on Finding Alpha, and he was telling us about, how we are cribbing that the Magnificent Seven is not yet here in India. He said, give it time. All these Microsofts and the likes, they as well started small. As a percentage of the US GDP, it was very, very small. As the GDP scaled up, these companies as well, today they contribute 10 to around 12% of the GDP. That is the market cap of those max 7 companies as a percentage of the US GDP. And he sees it's, in all probability, India can do the same as well with the larger names. But Sandeep, you briefly mentioned about Reliance Intelligence as well. You believe there's big potential, 850 crores. Just run us through that bit. Why are you so positive?
No, so, they are doing the right thing because there is a competition which has come in form of Perplexity and OpenAI. So, the obvious, and Reliance has a huge telecom base, a huge customer base. So, they are trying to buy this hardware and they are going to invest around 855 crore in Jamnagar, and they have tied up with Meta, which is working on the Llama LLM. And, in turn, Meta has hired the best talents in the world. You just see the kind of people they have hired in last few months, right from 100 million base salary to 1.4 billion. So tremendous amount of work is happening, and now combine that with Reliance own acquisition in 2019 of Haptic, where it will be easier for them to distribute this product. So I think Reliance Intelligence is very beautifully building the whole ecosystem where they can give a tough fight to the competition which is coming in. See, now this is not a recommendation of Reliance or anything. I run a PMS, so I'm just giving how they are thinking and how they are trying to build the ecosystem. And Nigel, I would say that, when Microsoft got listed, US GDP was 4.6 trillion and Microsoft was just 750 million. So I think we will do phenomenally from here. As GDP goes up, you will see a lot of techs coming in and, replacing a lot of big techs, which we are taking services today in India. I am very, very confident we will definitely achieve that.
Hopefully, absolutely. Sandeep, so since we have you, why don't you just, some of the stocks that you mentioned yesterday in terms of high conviction ideas, why don't you just recap those for our viewers, Sandeep?
No, so I have not recommended anything, but I would say this, that, we love the platform space because, the people, the nuclear family concept, the falling population growth rate and the lower fertility rate, all this augurs very well for the, the delivery platforms because people want solutions. It all works very well for, the small solver, like the carpet providers of carpenter, plumber and all. So those business models, it augurs very well for the tourism industry because, the way tourism is growing, and, you will need lot of platforms which can provide you comfortable and safe stay. So a lot of platforms will evolve like Airbnb. I'm sure that, there'll be a very big competitor to Airbnb, which is homegrown Indian competitor. Very, very soon you will see that. So we love all these themes. There's so many themes to play. There is a, luxury car rental theme. And so we are very confident that, platforms are going to solve more and more human problem. And the way life goes busy, even in the medical side, we will see a lot of diagnostic things coming up. Because, no one wants to do the ancillary work. For example, 10-15 years back, restaurants were delivering food to the doorsteps of customer because they did not have a choice. There was no one who can do that. So they were focusing on two businesses. As soon as Swiggy, Zomato came, today, if you ask a restaurant below your apartment, he will say, please do Swiggy or Zomato. I have experienced it every day. So, no one wants to do the ancillary work. So tomorrow, diagnostic, today they are collecting blood samples. Who knows, tomorrow something else can come which can do for them. So a lot of scope for platforms that take time to earn money, but then it is great business.
Absolutely. Directionally, talking about irreversible change, perhaps a lot of the companies that play in this space. Thank you very much for the conversation this morning. You have a good day and we'll look forward to connecting again. Thanks very much, Sandeep. We'll take a break on that note. Coming up on the other side, technical setup with our experts, Sudarshan Sukhani and Mitesh Thakkar will be in.
Okay, welcome back. The big mover yesterday, and actually the big mover in September so far, has been MobiKwik. I think in the month of September so far, stocks up 50%. There's no big news flow or anything of that sort. ADIA, the Abu Dhabi Investment Trust, sold out their 2% out stake last week. So that was a bit of a clean out trade. But, beyond that, I couldn't find very much. But beyond the price action, Hormuz has looked at some data points, which I think are useful. Hormuz, over to you.
There's some increased data and trading activity seen in MobiKwik, as you were mentioning, Prashant. In the last 6 sessions of September that we have had, the stock is up almost 50%, not only recapturing its IPO price of 279, but also going well past it now. And of course, as you mentioned, it was the 2nd of September, which is when the Abu Dhabi Investment Authority sold its remaining stake, made an exit from the company. That day, the stock was up 20%. But even before that, the stock had seen increased trading activity. Now, if you can see the month of September, all the 6 trading sessions that we've had, in every session, the volumes every single day have been in excess of 1 crore shares for MobiKwik, and the highest, of course, being on the 2nd of September, which was the day when the ADIA block deal took place. Almost 7 crore shares had changed hands in that entire day during that trading session. But if you take a look at the volumes before, in the 3 months preceding the 1st of September, the average daily traded volume on MobiKwik stood at almost close to 20 lakh shares in a single trading session. But after starting September, that has increased to well over 4 crore shares in a single day on an average, is what MobiKwik is seeing. Even in yesterday's session, we had almost 5.5 crore shares change hands. That was well above the 20-day average of 1 crore shares. And of course, that 20-day average has also increased considering the trading activity that we have seen starting September the 1st. Even yesterday, almost close to 40 lakh shares were marked for delivery in comparison to the 20-day average of which is just above 12 lakh shares. And the turnover in yesterday's trading session almost close to 1800 crore rupees, and that is almost 70% of the company's market cap, which is around about 2500 crores as of yesterday's closing. So increased trading activity, as a result of which, as I mentioned, the stock is above its IPO price, 16% higher, but from its post-listing high, which is almost close to 700 rupees, the stock is still down 53% from those levels.
All right, Hormuz, very, very interesting, as always, beyond just the percentage change, what's happening as far as volumes, delivery, etc. is concerned. Mayuresh is still with us. Mayuresh, any thoughts on this one? MobiKwik?
No, Prashant, so I think if you go by the past quarter numbers, obviously I think the numbers have shown some element of improvement as far as the EBIT is concerned, some bit of improvement on the PBT front as well. And therefore, I think even if the top line probably remained tad bit around the same levels quarter on quarter, I think the reduction in terms of the losses, both on the EBIT and the pre-tax number, is something which has enthused the street. However, I think what comes through in the next 2 quarters is going to be extremely critical. Are they probably going to achieve the element in terms of an EBIT break-even? It's something that the street will probably be looking at, and us as well at Markets with India. So I think we will be in a wait and watch mode, specifically looking at Q2 numbers and the benefit count.
Okay. Got that. Mayuresh, just very quickly, we were having that discussion on Infosys. I'm sure you could hear. The bigger debate is a different one, the utilization of cash, better or not. But here's the thing. Now there's a buyback happening, which, if nothing else, puts at least a floor on the stock, which is already down 25%. Would you be a buyer? That's what we were exactly discussing with Sandeep, that from a more defensive stance, does a stock like Infosys merit a place in the portfolio?
At this point of time, I think we'll again wait and watch, Subhi, because I think the numbers are still not coming through. And the commentaries have still remained a tad bit on the weaker side as we see it. Obviously, there is a huge amount of transition that is probably happening, as Sandeep was pointing out. I think the arbitrage advantage that all these behemoths had a decade ago in terms of labor, in terms of the outsourcing and the processing elements that they carried through, have drastically changed over the last couple of years. And therefore, I think accelerated investments in new products and platforms is something that is the need of the hour. Obviously, I think orders will keep on coming through. The execution will also keep on happening. But I think the pricing and margins of newer orders is something to be watched out for. And different sectors, specifically BFSI, and within BFSI, specifically insurance and banking as a space, how do they probably come out in terms of this entire tariff conundrum is something to be watched out for. Therefore, our take is even if the risk reward probably seems very, very attractive at this point of time, I think we've been very, very choosy within this space. I think Emphasis is the only mid-cap stock which we continue holding in our global portfolios.
All right, Mayuresh, very quickly, any view on PCBL? The Sanjeev Goenka company, they had an analyst meet yesterday, and they're talking about revenues go from ballpark 8,000 crores to 16,000 crores, but they also talk about margins moving from mid-teens to mid-20% odd, and the net gearing ratio will improve. Any view on that? He has told this to Shireen in the past as well, but do you have a view on the stock?
No, so I think, again, Nigel, I think the expectation largely is that it's aspirational. And obviously, I think the numbers that the company or the management is talking about over a longer period of time can get achieved. However, I think there are a lot of ifs and buts in terms of input cost inflation, in terms of new clientele that they're probably expected to add. And therefore, I think the stock has given a decent amount of run-up. Again, as I said, we are a little bit choosy when it comes to auto inks as a space. We want companies where the balance sheet growth probably looks stable, where the product portfolio is expanding at a very, very good pace, and where there is a lot of technical or a technology kind of support in terms of new product innovations that they're bringing onto the table, which is with a relative higher margin, and therefore should sustain earnings growth going forward. So decent company, but again, I think we still continue liking the other players within the auto ink space.
All right, Mayuresh, we'll leave it there. Thank you very much for joining us. Good chat as always. Appreciate your time here on CNBC TV18. So that's Mayuresh Joshi with a view on a variety of sectors and stocks. 4 minutes to go for the pre-open session. We'll come back. We'll, of course, get you the technical trades. Jyoti Gupta of Nirmal Bang will also be joining us to talk about the outlook for the defense sector, the 15-year plan in terms of what the focus areas for the government is going to be for procurement. So Jyoti weighs in on that in just a bit.
Welcome back. Well, let's get in our technical experts. We have Sudarshan Sukhani who joins us, as well as Mitesh Thakkar. Good morning, gentlemen. Yesterday promised to be a good session, and it was pretty okay. However, towards the end, the markets did lose their way a little bit. Now, today's weekly expiry, how are you all approaching trade? Sudarshan, you go first.
Yeah, good morning. Well, the uptrend continues, and we had that small sudden correction yesterday. And it's very difficult to predict such moves. So we go by the larger picture. The big picture is that the market trend is, the short-term trend is up. We are in some kind of a trading range. Every dip inside this range is a buying opportunity. Today, again, we have that FNO expiry, so it becomes unpredictable. Within this unpredictability, we still want to be a buyer. If you have long positions, stay with them. Otherwise, buy on a small dip.
Yeah, absolutely. Gentlemen, morning. Great to have both of you here. Mitesh, what about you? How would you set up things?
Morning, Prashant. I've been advocating that the indices will be in a range, and I think getting past 25,000 to about 25,150 will be tricky. Yesterday, we kind of reversed from close to 24,900. I think it is still a market which is directionless for me. Buying, yes, I would look at closer to about 24,500 if you get there. Otherwise, you try and take profits on long position on the index if you have closer to about 24,950, 25,000 dollars. But I think the bigger money or the better trading results would be obtained if you are more focused on individual stocks.
Okay, let's talk about those individual stocks then. Sudarshan, what's on your list?
Well, it's an all-buy list like it has been for some time. Syngene is a buy with a stop under 636. Tata Elxsi is a buying opportunity with a stop under 53.70. It's also a positional buy. Ashok Leyland is a buy with a stop under 134. And Bharat Forge, in spite of the fact that it had a very decent rally, continues to be a buying opportunity with a stop under 1178.
Got it. Okay, all right. Thanks for that, Sudarshan. Mitesh, what about you?
I have Bharat Forge on my list as well. Yesterday, clearly, there was a strong price volume breakout. So keep a stop below 1180. Look for targets of around 1245 here. A buy on Adani ESOL, Adani Energy Solutions, where, we got a good reversal on the 2-hourly, 3-hourly charts. So buy here with a stop below 763, 764. Look for a first target of around 800. couple of sell calls. I have a sell on Asian Paints. There's a good chance that we might be seeing a double top formation over here. The indicators have broken down, so chances are that price will follow. I'd suggest a sell here with a stop at 25.60 for targets of 24.70. And the last is a sell call on LTI Mindtree, which has broken from a rising trend line. So sell with a stop at about 51.30 or just above it, and look for a target of around 5,000.
Okay, all right. By the way, keep an eye out on the bottom of your screen, the money market alert that's come in there. The money market was closed yesterday. It's reopened today. And there is some strength that we're seeing on the rupee that's pulling back close to around 0.3%. So keep an eye out on the bottom of your screen. That said, let's focus on vol time. As Nimesh told us that there's likely to be a large trade. Nimesh, bang on, tell us more.
Well, Nigel, so we all know the news that there's going to be a large block in vol time. The promoters are looking to sell 7.8% via block deal. It's a very small 2% discount to yesterday's closing price. The follow price is 7,600. But I've done a bit of a deep dive into vol time as well. Now, after today's block deal, the promoter holding will fall below 30%. And in the book, it's mentioned, and if they indeed sell their entire 7.5 lakh shares, then there will be a 2-year lockup for the promoters to sell further. So no further supply likely. Interestingly, in September 23, the promoter had sold 12% stake at an average price of 4,633. And since then, after that, in that 1-year period, the stock had hit an all-time high of almost 14,800. So that's the kind of move we've seen when the first time the promoter sold 12% stake. In this year, the stock is down. Like Y2D, the stock is down close to 25% and 46% from the 52-week high. Now they are selling another 7.8%. But since the first block, I've just looked at the numbers as well. Since 2023, when they sold the first stake, the revenue has risen only 11%. The margins are down 100 basis points since then, since 2023, and the net profit is up 17%. What is interesting is this could be the potentially large stake sale from the promoter. So from that sense, the supply overhang will be out of the way. And if you look at the past history, after the first block, we see a big re-rating in that stock. So that is something to keep in mind. And today there is going to be a block at a 2% discount to yesterday's closing price.
All right. That's a very, very interesting, a quick deep dive. Nimesh, thank you very much for that. Well, let's just talk about the standout brokerage report of the day as well. Nimesh, since we have you, why don't we wrap that up as well? What are you picking up?
Well, Prashant, just give me a minute because I just had to cut this call and come back to you. Give me a minute to come back for this.
Okay. Got that. I think we'll go back to innovation a bit from now. The Defence Ministry has unveiled a comprehensive modernization 15-year roadmap for India's future capabilities as far as defence and warfare is concerned. How should this be read is the question. Jyoti Gupta, defence analyst at Nirmal Bang, is now joining us to help us with that. Jyoti, good morning. Great to have you with us here. For our viewers, for the uninitiated, and I trust you've looked at what was put out. Just if you can tell us the big highlights in terms of what you picked up from the document.
First of all, I would like to begin by acknowledging the tragic floods in Punjab. Our hearts go out to people impacted. This is a time for all of us to stand together in support of relief and recovery efforts. Thank you so much for having me on the show. Honestly, this roadmap is long awaited. And this is for the first time that the government has put forward a truly comprehensive long-term plan that unifies Indian Army, Navy, Air Force modernization under a single vision. I mean, on an overall basis, if I look at the document, a total of 151 projects are being progressed by the services under Make 1, 2, and 3. Out of these, 63 have been accorded AONs, which is acceptance of necessities, and 4 projects have been contracted so far. There are some critical platforms which are already progressing well, even beyond what's not even mentioned in the document. So, what I think that, honestly, it does prioritize next generation technologies such as AI, hypersonics, cyberspace, and robotics, strikes a balance between indigenization and global partnerships, and of course sets out a 5-15-year timeline backed by budgetary documents. But challenge now is execution, matching ambition with delivery so that the roadmap does not remain aspirational, but translates into real combat capability on the ground, at sea, and in the air. It is very important. And to be fair, I think this marks a decisive shift from a reactive procurement to proactive capability building, something which has been demanded since Cargill Review Committee in 1999. So I'm just hoping that things fall in place and the entire defense ecosystem is benefited from this roadmap.
No, absolutely. You seem a little, right at the end of it, a little skeptical, long awaited, but you think there's a chance of us, as they say, slip between the cup and the lip? Or this is now set, the trajectory is set, needs to be executed?
Yes, the trajectory is set. I do not want delays. I don't see a slip, but I don't want delays this time.
Yeah, nobody
Meeting
wants delays.
timelines is very, very critical at this point of time.
Yeah. From a listed universe, Jyoti, let's just distill it down. What does it mean for what companies?
So building on this entire story, I think what stands out to me is that this roadmap creates opportunities not only for defense PSUs, but for the entire defense ecosystem. Subsystem manufacturers, private players, and MSMEs will increasingly be pulled into this larger programs as India transitions from assembling to integrating and eventually exporting complex platforms. Now, this will naturally put pressure on companies across value chain to scale up, meet global standards, and execute with discipline. From an industry perspective, the shift also means defense is no longer a sectoral play, but an ecosystem story, where strong order inflows, robust research and development, and tighter supply chains will define winners. Some firms will capture outsized gains, others more modest, but collectively the industry is entering into a multi-year growth cycle. And what needs to be understood is that this is a highly capital-intensive industry. Therefore, large players are obviously expected to be benefited. They will have resources, and I think they should pull into all these smaller players who have the real capabilities and create a very, very robust system.
So, Jyoti, right, absolutely. So, distill it down for the viewers then. From a shareholder perspective, if someone wants to make money out of defense stocks, say in the next 1 to 2 years, should they stick to the large players like you're saying, go in for your BEL or the PSUs basically like an HAL or a Masgaon or a BDL, or should they look at also private sector names? Give us top three picks, say.
So you would have my top 3 picks, which I've been talking about it. My top picks across, even when I'm pitching to my clients and in my reports, has been Held, BEML, and in the private players data pattern. So you should not look at defense PSUs alone. You should look at private players because they could be multi-baggers. But having said that, I think the entire defense ecosystem is going to perform very well. We just need to identify who are going to be outliers, big outliers.
I'm recapping top 3. You said HAL, BEML, right?
Yes.
So Hindustan Aeronautics, BEML, and data patterns is one private sector pick. Okay. Yes. Got that. And you've been positive on these companies for a while now. So got it. Thank you very much, Jyoti. Good conversation.
Just one thing. Jyoti, does it make sense there are these defense funds, etc. as well? I mean, to get a broader exposure that is for retail investors, that makes sense as well, since you believe this is the start of a multi-year upcycle.
Actually, defense index is a good way to invest. They're all-time low any which ways. And see, all these platforms that you see is not going to benefit in 1 or 2 years because even the prototypes are still not out. So this is a long-term story. This is a 3 to 5 years. So if you invest now, sit back for at least 3 to 4 years and you're going to make it. This is definitely a story to look at.
Okay, all right. Jyoti, thank you very much for joining us. Good speaking with you, and it's a pleasure. And good conversation. Let's now bring in Nimesh. Nimesh, morning again. The brokerage report of the day.
Hi, morning, Prashant. Today's standard is on the Aditya Birla Fashion and Aditya Birla Lifestyle brands, the 2 companies which got demerged, very recently. So Morgan Stanley has put out a note today on both these companies, and they've upgraded ABFRL to an overweight with a target price of 113. They believe that ABFRL is at the cusp of fundamental improvements, including leading to profitability, and they see a potential re-rating as well in terms of valuation. So that's a big call on ABFRL. Now, ABFRL, Morgan Stanley believes, is a good play on the luxury businesses, and they expect a 14% revenue and a 27% EBITDA CAGR between FY27 and FY28, and at valuations of 10 times FY27 EV EBITDA, the risk reward seems to be favorable as per the Morgan Stanley note. So that's an upgrade on ABFRL. They've also initiated coverage on the other demerged business, which is the Aditya Birla Lifestyle brand. There they have a target price of 175, and they believe that it's a good mix of core businesses as well as the younger brands, which are likely to grow faster. And that is where there could be a re-rating coming in that company as well. And they expect a 10% revenue CAGR between FY27 and FY28 estimate, and they expect a gradual improvement in the profitability as well. And this stock is trading at close to 13 times on FY27 EV EBITDA. So a coverage on both these companies, but an upgrade on ABFRL by Morgan Stanley with a target price of 113.
Okay, so Aditya Birla Fashion and Retail and AB Lifestyle, will keep both of them on our radar. Thank you, Nimesh, very much for that. By the way, as the pre-open has settled, look at Infosys. 3.5% is the initial opening pop that the stock is indicating. In fact, some of the other IT names like Wipro, etc., are also higher on the back of that excitement. Maybe more buybacks ahead from the IT giants. Let's quickly move on. We have our technical experts standing by for the 9-10 calls. Sudarshan, which stock will it be?
That'll be Tata Elxsi. Buy Tata Elxsi with a stop under 53.70.
Okay, and Mitesh, for you?
I'll go with the buy on Bharat Forge for targets of 12.45.
Yeah, absolutely. Gentlemen, thank you very much, both of you. 2 minutes to market open. Naveen Florin is what we want to shine the spotlight on once again before we start. Sud is back with us. So over to you.
So before I talk about Jeffrey's view, take a look at the stock performance. It's down 14% from 52-week high. The stock had hit on July 31st, but still up 44% in 2025. Now, Jeffrey has come out with a note. It has a buy call and target is 6,025 per share, and that implies an upside of 30% from current levels. It says company has started deliveries of 3 new molecules in specialty chemical and 1 new molecule for CDMO space, and R32 ref gas prices are holding firm on strong US demand and limited exports from China. Also, recently company has bagged an order from Samsung Electronics, and that is going to be a new growth driver. As far as the valuation are concerned, it's trading at a long-term average for PE while offering 36% EPS CAGR over FY25-28.
Okay, all right. So got it. Thank you very much. So we'll keep Naveen Florin on the radar. Naveen Florin's up about 1% in the pre-open. Aditya Birla Lifestyle, the stocks that Nimesh was just talking about, 4.5% higher. Yeah. And then, IT obviously is a big theme today.
ABFRL yesterday, so day before, Friday's close was, I think, 85. Yesterday went up like a rocket. High was 94 and then closed at 88. So it was along with the market which sold off, this one also came off very sharply. Middle of the day, it made that high. So this morning, it's again trying to get back to it. It went to a high of 94 odd rupees or so. So at about 90, just under 92 this morning, with large volumes in the pre-open session as well. So Naveen Florin is perhaps the other one we should look at before we go any further. And the first rate should be with us in a couple of seconds from now. So 90 and 340 on the Nifty and the Sensex respectively. And then we will look at the Nifty heat map, get down to individual stocks, etc. Shortly. 24,860 on the Nifty, 54,300 on the Nifty Bank. Small cap index is up about 1/3%. You got the mid cap index, which is up about 1/4%, 57,500 plus. And it's a pretty good start, all told, this morning. I think right out of the gates, you've got 1,300 stocks higher and about 400 stocks lower. But this typically does change. And the Nifty heat map should come up next, which will give you a sense of where we are likely starting before we get to individual names, etc. Voltamp, I think that 8% block has changed, equity has changed hands, 2% lower on Voltamp. So 76.20 or so is where that is trading at. It's largely all in the green, and you can spot a lot of IT on one end. Remember, the IT index has sold off pretty hard on Friday and yesterday as well. Of course, it's been underperforming before that. On the other end, in terms of what's down, there is Bajaj, Eternal, etc. So, but overwhelmingly in the green. And of course, that's the IT index with about 1.8%. I'm assuming largely propelled by what's happening with Infi. Surbhi.
Absolutely. So Infosys 3% higher, Wipro's 2.5% higher. HCL Tech 1.5%, Tech Mahindra, TCS. I mean, it's just gotten the whole sector excited, saying maybe other companies will follow and return more cash to shareholders like Infosys is planning to do. Remember, the board meeting is on the 11th of September and we'll have more details then. Beyond IT, HDFC Bank is a good support. Stocks up about 0.6%, 0.7% right now. L&T is another heavyweight that's providing some cushion today, 0.5% higher. So looking pretty decent. After that, it fizzles out. The only stocks that are down are some of the consumer and auto names that are cooling off after the big run-up that they've had. So Bajaj down by 1% or so. M&M is down about 0.5%. Titan, there's also Lever, which is showing a smidge of red. Reliance is absolutely flat, so it's not really contributing. Ditto for ICICI Bank, largely on the flat side. But it's IT on the way up. Trent is recovering after the drubbing yesterday. Trent was down quite a lot. It's up about 0.5% at this point in time. Nifty are around 70 points higher, largely all thanks to IT.
Two stocks that have been big underperformers are finding its form in the month of September itself. Prime Focus up 30% now for the month of September. Precision Camshafts, there was that talk about them trying to do something on the electric vehicle side. Retrofitting is something that they've been looking at. I think they're selling one of their assets or writing off the asset in Europe. So Precision Camshafts is the other one that's up close on 7%. And for this month itself, that one's up more than 35%. So big up move is what we're seeing on that name. IOL Chemicals, that's the other stock that was higher in yesterday's trading session. It's seeing some follow through. RailTel bought a small order. Street likes it. So that stock, in fact, is holding up well in the green. On the flip side, a couple of stocks are coming for some profit taking after the big run that we've seen. GMDC is now down close to around 4%. MobiWik, that's another one that's coming for some profit taking. Remember, both these two stocks have had a one-way run. Voltime, you already mentioned, is lower. And Ola Electric, after dancing away closer to around 70 rupees, last few trading sessions, there has been supply that's resumed. So that one now has just breached the 60 rupee mark. So I think that's another stock that you should be keeping on your radar, whether or not that dip that does get bought into. But Prime Focus, clearly the stock of this month itself. And TBO Tech, we had spoken to the management yesterday. Remember, post that acquisition, the stock has seen a big run. In fact, yesterday, intraday did see some profit taking, but it's moving back up. The reason being, the acquired asset will increase their revenues by close to around 50%, right, and EBITDA by close to around a third.
Well, so TBO and actually Prime Focus, right? Two names which have done very, very well. And right there on the top of the list. So 76 points on the Nifty, 24,850 is where we are at. And we should have some of the buzzing sharp movers at the bottom of the screen. So, Prime Focus again. IOL was a big mover yesterday. It's up 4%. Precision Camshaft, I think we just mentioned 5.5 higher here. RailTel out of the blue. I mean, it's not done very much last few weeks now, 3%, but it's got volumes. Action Construction Equipment, that's up about 3%. So you got lots of these decent, well-tracked, well-owned names. Force Motors, today, actually, Force Motors sold one-way move. It's still up like crazy this year so far. But then it had a pretty meaningful pullback as well. Last 2 days, it's trying to come back up. Taj GVK is up about 4.5%. Policy Bazaar is another one which is up about 2% or so. So yeah, I mean, lots of names, volumes. If I go down the list, then start to thin away a little bit. NetWeb is another one of those movers, right? I mean, it has gone up like a rocket over the last 5 days, 6 days. Today, it's down 3%. It's got the second largest volumes on the downside, NetWeb. And Mosship is another name which has gone up like a rocket. It's down 4.5% today. Again, third largest volumes on the NSE. And, MIC Electronics, MICEL, we highlighted this yesterday. Again, these are all, shooting stars. But we'll see if they are short-lived or durable. But this one is coming down 6.5%. Fourth largest volumes on the NSE. MobiKwik is another one, which Hormuz highlighted with lots of delivery, etc. stats. 50% this month. MobiKwik is down about 3% right now coming through. So lots moving. We'll get you more in a bit. Sandeep Bhatia is with us, Managing Director, Head of Equity India, Macquarie Capital. Sandeep, great to have you with us here. Thanks very much for your time. Your view broadly, and I'm just paraphrasing or just summarizing your views, that you've been a little cautious at the margin, right? On the back of a bunch of things. And it's kind of borne out because as far as individual stocks go, something here and there is always there. But at a broad level, the feedback is, people have not really made a lot of money. Over the last 3 months, 6 months, maybe even 1 year, we've been kind of flattish. Do you think there is more time correction ahead of us, or you think, I mean, ingredients are coming into place and we perhaps in short order should reverse some of this negative sentiment? What's your sense?
Yeah, I would agree that we're still in the slow burn phase of this market. I think the GST cuts which have been announced are welcome. I would actually believe that the GST cuts will do more benefit for the economy than the income tax cuts which happened in the Feb budget, because the GST benefits a wider section of the population. It's around spending, and it's not necessary that some of the income tax savings will be spent. They may be saved. So all told, GST move is actually better than the income tax cut. But if you see the current picture, we are in the Shraddh, Pitru Paksh. So I think consumption will still broadly be weak till 21st of September. So this quarter is not going to be good. While we saw last quarter come with good GDP growth, we'll see actually a downtick in terms of the number from the high that we saw in the previous quarter. So all told, it's still a slow burn. The only thing I can visualize is a good festival season. And if we see that, I think October to December markets will see another rally. But on the whole, we are still on high valuations. We still face uncertainty on tariffs from the US. We also are in a very geopolitically volatile region. We saw what happened in Nepal yesterday. So all told, it's still a slow burn.
Okay, slow burn, so still have to be a little cautious, take that point. But Sandeep, I really want to congratulate you on the call you made on autos. And I remember, I think we spoke very early in August, much before the Prime Minister's speech from the ramparts of the Red Fort. And you said auto as a sector is looking interesting. And at that point, your thought was more centered around the fact that we're getting rate cuts. So, maybe it gets people to go out there and buy. Since then, individual stocks are up anywhere between 15, 20, 25% in some cases in the last 1 month. So how much of the excitement and, this pop, how much of it is in the price? Or do you think the GST cut, because it's permanent in nature till the next round, or do you think it really turns something, especially, say, for the passenger vehicle space, maybe for stocks like Maruti or Hyundai, which have been totally bombed out?
I would actually think that the GST cut in the auto space gives it a lot of legs. I also believe that eventually this small engine capacity cuts have to go. Now, whether it takes 2 years, whether it takes 5 years, I don't know. But GST in autos should be uniform across size of car and across engine capacity. Maybe that will take a couple of years before it comes. But in the near term, there is definitely a big impact on model cycle. I expect both Maruti and Hyundai to benefit from the GST cuts, and also from the fact that there is a model cycle impulse, which will drive people to the showroom, which will drive people to buy cars. So to that extent, all the three manufacturers, whether it's M&M, whether it's Tata Motors and Maruti and Hyundai, all of them will see benefits, and especially vehicle manufacturers which have new models coming in. I would definitely think that Mahindra has benefited a lot from this. I would expect Hyundai and Maruti now to also come through in this on this pulse of new model and new launches.
All right. Hi, Sandeep. Good morning. And I also recall, on autos, you were positive. That's played out well. So good on you. The other, industry that you liked was the hospitality space. I recall us chatting the last few times actually about hotels. And there seems to be no let up. A couple of conferences that I got a sneak peek into. I was, hearing those that are heading some of these hotel chains, and they are sounding extremely optimistic. Would you share their optimism? Or do you think after the recent run, you believe that, maybe in fact you're not as bullish as what you were earlier?
So I structurally, we are positive on the hotel sector. I think now in terms of valuations, as we are cautious with the market, we just have to think about valuations. If your holding period is more than 2.5, 3 years, then you can definitely continue to be extremely positive on the hotel sector. We have to look at what is the mix of new properties coming through, whether these are big capex investments or these are existing hotels which are taken over under management control. What's the capital efficiency of these new projects, and so on. So all told, I'll be positive, but not the kind of run which they have seen in the last 12 to 18 months, that needs to moderate.
Yeah. I mean, what runs very fast. What doesn't run is crawling, right? I mean, that's the two-speed state for the market. So, in terms of really out and out, down and out kind of spaces, if there are any, Sandeep, and typically that is the time to kind of sort of focus on it instead of trying to chase things higher. Anything left out there of interest to you?
It's a bit of a tired sector, but banks can actually do better. They have not been down and out per se, but they have not been the best in the last couple of months. I think we could see another rate cut. I think consumption is going to come back in this festival season. I think some of the banks will get their mojo back. And well-managed banks look interesting. So I think banks definitely look good. And especially in a geopolitically volatile world, export sector remains a bit of a question mark. So domestics like autos and to an extent banks and, as I said, hotels all look better placed on the whole.
Insurers, Sandeep? Any thoughts?
Insurers, have to go through this margin hump in terms of the GST cut, input tax credits, and so on. So yes, I mean, longer term that's fine. But in the near term, there is this GST impact and input tax credit impact, which you need to pass through.
Internally, just one last from my side, Sandeep. Internally at Macquarie, as a team, is there? What do you think? How long before we get a tariff truce with everybody's got their thoughts, theories, etc. But I'm just curious.
I'm not privy to what the White House thinks.
No, nobody is privy, Sandeep. Yeah, but that doesn't stop people from. It's all about looking ahead, right? So is it short-lived? Is it longer? What's your sense?
So, if you look at the political calendar, and I don't think people have forgotten that we have a very heavy political calendar in 2026, starting from elections in West Bengal and also in Tamil Nadu, which are two big important states for the BJP. I think they want to do this before March, because after that, the political calendar is extremely heavy with state elections. So logically, it should be between now to March that it should happen. But of course, the stars need to align, and things need to fall in place. But we because 2025 was a very light political calendar, and we have not had much impact. There's a Bihar election in end October, November. But other than that, we actually forgotten the politics. And I think to come 2026 and 2027, the state election calendar will be very important and will have an impact both on policy, will have an impact on the government's preoccupation.
Interesting, Sandeep, since you're mentioning about that. Mr. Modi has held its ground. He has said clearly he wants to protect everyone here in India, particularly the farmer community. So otherwise it would be easier, for India to approach United States, try to arrange a dialogue, because you don't know what Mr. Trump is going to do next. He'll put it out on X or some platform that, the delegation approached me, they really wanted me to give in. So I think it has to be handled very, very carefully, because you have a Bihar election that's, just around 2 months or so, less than 2 months away. So, a little bit of a tricky situation. Otherwise, a phone call from Mr. Modi to Mr. Trump could have been on the cards. I think that will have to wait a little bit, or a lot of thought will have to go into it because of the man we're dealing with, Mr. Trump.
Yeah, that's we never know. Just have to wait and watch. Never second guess what the White House is up to next. But two quick questions from me, Sandeep. One is, okay, let's take IT, and then I'll ask you the market question later. IT. Now, Infosys, we would expect the company, I think the market would be far happier if it was a very great tactical acquisition or something pro-growth, but what we've got is a buyback announcement. Would you look at buying IT stocks just because at least the valuations are maybe more comfortable now, and there's a cash play, there's a defensive play? What are your thoughts?
So we are cautious going into the near-term numbers for IT stocks. So you should have a 3-year time frame for IT. Then you can probably look at them. There's a lot of moving parts in terms of the US and whether it makes any other further moves. I don't expect, actually. So I'm not in the camp that things will get worse as far as the Indian IT sector is concerned. But yes, I mean, you should, as I said, you need a slightly longer term time frame, at least 2.5 to 3 years.
Okay, so have a longer term time frame if you are venturing into IT stocks, traditional IT services, that is. Finally, Sandeep, the point on the market itself, and when we spoke earlier, you had a view that there will be this time correction lasting. Now that we have another big stimulus boost in the form of GST, where does that leave us with expectations of a bumper festive seasons, the earnings pick up, and eventually the market picking up? Where are we on the whole trajectory?
Well, where are we on the whole trajectory? If the markets were 10 to 15% down, then we would be at the cusp of a run. Because the markets are not down as much, though they've been burnt on a slow burn path. It's a combination of whether we really see a big earnings surprise. And as I said, I don't expect September quarter numbers to be a big earnings surprise. October, December festival season logically should be good, and I'm actually optimistic for a change on that front. But even then, whether we see that continue in terms of the tariff issue getting resolved with the US and so on. So we need a couple of, other than just the immediate GST earnings kicker, we need more stability on the economy and some good news on politics before the market can really see a big leg up. So yeah, it's where we are, and and we have to go through this next couple of months slow burn phase.
Yeah, absolutely. Sandeep, good chat, good conversation, and look forward to the next one. Appreciate your time here on CNBC TV18. Thanks very much. So that is Sandeep with his thoughts on the market from Macquarie. Well, what we want to do is quickly play out this specific portion from the FM interview that my colleague Rahul sort of conducted. And this is essentially with regards to Finance Minister Sitharaman essentially reaffirming support for exporters. The most hit sectors like textiles. And she basically promised a package for exporters soon. Basically saying that we will not leave them in a lurch. Listen in.
There is a package which consists of very many different ways in which we want to help them. So we'll wait for the cabinet to clear it. But there is something coming to help them so that this tirade of the tariff is something which they can face. And also suddenly having to look for newer markets is also a challenge. But we'll have to help them out on that. But we really can't leave our exporters high and dry saying it's going to change sooner. We will work with them.
Okay, that's the Finance Minister, promising relief that it would be coming soon for export sectors. Well, with that, let's quickly move on and get the next management on our radar. And we're going to be in conversation with Mr. George Alexander Muthoot, MD of Muthoot Finance. Great to have you with us on the show, sir. Always a pleasure to get perspective from you. So, today specifically, we want to focus on 3 talking points. Number one, of course, given all the changes, the GST cuts, the talk of more stimulus, whether you will be looking at revising your guidance higher at all, FY26. Then we have to, of course, understand how your yields are moving. And then, of course, an outlook on the cost of funds, whether you expect more rate cuts and what that will mean for your margins. So, Mr. Muthoot, let's start with your, broad brush, read through of the GST cut. What will happen is, because for a lot of daily consumption items, the rate has come down from 12% or 18% to 5%. People will have more money in their hands. Now, the question is, what are they going to do with it? Whether they'll buy more, whether they'll go back and repay some outstanding loans. What's your, best case read through of this?
Thank you. And first of all, good morning to all of you. You were asking about the GST. So GST...
Yes, and the implications on your business, sir, yes.
GST number 2 is a big bonanza. It was big bonanza. And I should call it not GST, but see it as a great savings tax. Not GST, no. Great savings tax is what GST 2 is all about. So it's a bonanza for everybody. But of course, directly, we are not involved. We are not affected or impacted positively or negatively by the GST. But of course, all our customers have been impacted. That's exactly what you said. All our customers have been impacted positively because I'm sure all their disposable incomes will be much better, much higher. They'll be able to spend more and probably save more also.
So I think that's a big boost to the spending, etc., which will have an indirect impact on maybe the people who borrow and who are able to repay easily. Yes, that is the good impact we see on the GST front with regard to gold finance.
So, Mr. Muthoot, sir, since there's likely to be more buoyancy, it's also a sentiment booster, right? Generally, when I have more money, the propensity to buy more, maybe, borrow more and then, fund my purchases, maybe more gold loans. So would you look at revisiting your guidance? And you anyway had a flying start in the first quarter. So instead of 15%, do you think 20% growth is going to happen this year?
Surely, definitely. Last year we had almost a 40% growth. As it stands, in the first quarter we had done well. I think second quarter also we are doing well. So probably after this, during the second quarter results, when we are announcing, we should certainly give a revised guidance, which definitely will be more positive and probably which will reflect on what is happening and what is going to happen in the next year. Certainly, it will be a better performance this quarter also, and we hope, and I'm sure we'll be able to continue what we were doing last year with regard to the guidance. So I don't want to give a number right now. That number I will give during the second quarter results.
Surbhi, Nigel, when we speak with Mr. Muthoot, it's always always smile. It's a nice smile, right? And you make us smile as well, sir. It's contagious. So look forward to our conversations. And in August, Mr. Muthoot was with us. He said, 15% is the growth guidance, but would be definitely higher than that.
And now he's saying he'll definitely be better, but he'll tell us a number in second quarter.
But mathematically, it has to be the case, Mr. Muthoot. You're teasing us. You're making us wait till the end of quarter 3. Now you have to revise it. That's a given. The question is how much? What is going to be the new number which we'll be waiting for? I know the floor is open to you. You can go for it right now. You can give us a broad range and then narrow down on that range at the end of quarter 2. What do you think?
I don't want to do that right now anyway. See, our job is to run the company well. This is a good time for the business. The gold loan sector is doing well. The demand is very much there in all the sectors, wherever it is the outside the rural sector or in the cities also. Demand is definitely great. More people are getting attracted to this. So now priority now is to actually do the business better, grow the AUM, and that is our priority. We will do that, and I think guidance, etc., is just a number which I'm sure we have been doing well. We should be doing well there also. Guidance for the profit, guidance for the AUM. I'm sure it will be positive. As it stands, it's positive. Even the regulations which came are quite positive into this sector. So the gold loan sector definitely should do better, and the demand is also great.
Okay, we won't push you any further. We'll patiently wait for second quarter, but it is looking good and definitely a lot better than what you've said in the past, which was 15%. Since we're talking gold loans, sir, our colleague who tracks the company, Gaurav, pointed out that there were reports indicating, I think Bloomberg did a report yesterday, that the RBI is asking entities to pull back from subsidiaries having an overlapping line of business. For instance, for you, the parent company is into gold loans and there is Muthoot Money, which also gives out gold loans. I don't know, have you heard anything of this sort? Is there any regulatory change that you're anticipating on gold loans?
We haven't heard, but if the regulator insists that we should merge it, we should merge it, that's all. We don't want to go against the regulator. Whenever they come, they have not said anything like that till now. We have not heard anything. If at all they say something, that we will follow it. Simple as that.
Okay. All right, Mr. Muthoot. Okay, so you don't see nothing big on this front. If it's needed, you'll follow what the regulator has to say. Yeah, right. The other point is you have things going for you, right? Gold prices are up. That obviously helps growth. Give us 2 more numbers if possible. One is on tonnage growth. What kind of tonnage growth can we look at? Because gold prices are moving up, which is obviously helping the business. But on the tonnage side, if you could help us out on that front. And also the cost of funds, that's likely to come down. I think you were guiding for, 30, 40 basis points, a little more than that. So how do we see that flowing through? The cost of funds coming down?
Yeah, I think I should talk about the cost of incremental borrowing. The incremental borrowing from the NCD market, the local NCD market is quite positive. We have been borrowing, we have been getting 3-year funding and 5-year funding at maybe sub 8%. I think that's a good one. Probably that is definitely good for us. 3-year and 5-year NCDs bonds at less than 8% is quite good. That is an incremental cost of borrowing. As far as the bank funding, which constitute about 50 to 55% of our total borrowing, the banks have just recently or just starting to revise or bring down the MCLR. The MCLR has really not come down. So impactfully, today the bank borrowing cost is still less than 9%, maybe 8.75, etc. I'm sure in the next 1 or 2 quarters, that's also start coming down. The point here is the banks transmitting the lower cost of funding is slow in coming. Probably we should see the bank funding cost also coming down in the next 2 quarters. The third source for us would have been the external commercial borrowing. We did a 600 billion external commercial borrowing last week. The money is in the bank now. So we got, which is fully subscribed, and it is done at 6.45 to 6.35% in the international market. Considering the hedge cost, etc., probably the cost should be around 9% or a little less than 9%. Why we did the international funding is that we wanted to diversify our funding source. We did not want to rely too much on the Indian market, etc. So it is just, though it is a little more expensive, today it constitutes about 10% of our total borrowing. So we wanted to diversify. So overall, we see that the cost of funding is coming down. And as usual, that's our practice, the Muthoot Gold Loan Company, Muthoot Finance practice, that whenever the cost of funding comes down or cost comes down, we pass on the benefit to the customers. So we today, the blended rate is maybe 17.5 or 18. If the cost of funding is coming down, we'll pass on that to the customer as and when necessary. We will certainly maintain our spread and our net interest margin. We'll maintain that, and to maintain that, if the cost of funding is coming down, we will pass it on to the customer. That is one of the reasons why more and more customers come to Muthoot. Actually, 80% of our customers are repeat customers.
No, absolutely, and you've always you've always maintained that you will pass on any benefits of lower cost of funds. But can you just reiterate that? I think spreads you said will be around 9.5% this year. Given the rate environment and your cost of funds, diversifying the source of funds as well, what does all of that mean for margins this year? What is the range or, a rough guidance on net interest margins as well?
Yeah, net interest margin has been in the range of about 5.5 to 6. I think we should be able to maintain that between 5 and 6. We may be able to maintain that also.
Okay, Mr. Muthoot, we'll leave it there, sir, and look forward to our next conversation.
Thank you.
Thank you very
You're
much.
all an encouragement for us.
No, absolutely.
I really encourage us to do better and better. That is why we are doing better.
And you do the
Keep
same.
on encouraging us also.
You do the same for us, sir, and we look forward to our next.
Happy belated Onam.
Ona Shamsagal, sir. Happy belated Onam to you too. Thank you very much for joining us and those greetings. I think, we're going to just look at the market for a quick bit. 77 odd points on the Nifty, 24,850. And it's looking pretty solid so far. And we'll see if there is any change. By the way, market breadth has compressed a little bit. Just look at the advanced decline lines. 1,500 stocks are higher and about 1,100 stocks are lower. So the gap is right there. You've got, I don't think the leaderboard has really changed. It's still the same. Only that precision camshaft, I think we highlighted with a 5% gap up in the morning. It's up 11%. So 543, beg your pardon, 243 on precision camshaft. But the others, Infi, Prime Focus, IOL, Railtel, these were all there in the morning. Action Construction, Force Motors, Taj GVK is another one. Taj GVK is up 8%. Now it's actually picked up more gains from the first time that we highlighted it. TBO Tech has pulled back a little bit, but it's had such a large move recently. And Engineers India Limited is up about 5% as well. So that's the overall picture as things stand right now. 80 points on the Nifty.
Just one point on Taj GVK. We had, explained this company purely for educational purposes earlier in our segment. We had mid-cap microscope, and there were few factors why the stock was trading cheap. One was that it's only South focus. The second factor is that, they haven't expanded at the rate at which the rest of the industry has expanded. And the third factor was Indian Hotels has 25% in the company, while the GVK Group has 50%. So there was uncertainty with regard to, what's going to happen with that shareholding. So whether or not there's going to be some resolution on that front, that's something that the street will track. But otherwise, valuations were in favor for a 2,600, 2,700 crore market capitalization company with approximately 1,500 rooms by the end of this fiscal. So on that EV per room, actually, it had support, but now maybe something with regard to clearing off of that shareholding pattern. We'll have to wait by, but the last few trading sessions, the stock has done well. It's been a relative underperformer, catching up in the last few sessions. I'll tell you what, we'll slip into a short break. On the other side, we'll connect with the management of Prudent Corporate Advisory. The company, in fact, had done some inorganic growth. Stay with us. Welcome back. This is Corporate Radar. Well, the next company on our show is Prudent Corporate Advisory. We have Sanjay Shah, the CMD of the company, who joins us. Hi, Sanjay. Good morning and good to see you, Ben. Well, first, we'll just tell our viewers the three big talking points that we're looking at. Indus Capital's mutual fund business acquisition rationale. That's what they have done. What's the rationale on that? Will the acquisition be margin and EPS accretive? And also, what's the growth expected from Indus Capital's mutual fund business in the time ahead? Thanks a lot, Sanjay, for speaking to us here on CNBC-TV18. And, before we get on with the rationale about this, I wanted to compliment you. I've noticed in the past there have been some filings where you share some part of, of the wealth you're creating via equity with your staff, with your support staff as well. So kudos to you. I've, observed that earlier this year as well. I think in June 2025, if I remember, the quantum was around 45 crores. So good on that. That said, let's focus on the acquisition that you've done. Indus Capital's AUM is only around 2%, I think so, of your total pie. But the PBT margin's around 7%. So tell us, how do you see scaling up of this business and also in terms of profitability?
So thank you very much, Nigel, first of all, for complimenting. And if you look at, because specifically if you look at as far as mutual fund industry is concerned, I think we have been always looking for the inorganic growth because company is sitting on a significant cash. And this is the business which has been run by Mr. Sanjay Sanghvi, who is the founder. And he has been in this business for almost now more than 22 years. If you look at the entire business construct, they have been managing roughly about 3,500 families, and the average AUM per family would be less than 1 crore. And 95% of assets comes from the long-only mutual fund in the equity bucket. So, and then another important thing is that this entire business has been managed by 15 real estate managers who are there in the business for more than about 15 years. So it's a very, very well-structured business. Mr. Sanghvi was looking for aligning the interest with Prudent, and it was a very win-win situation for us. If you look at from the point of rationale, because Prudent has been very, very strong on the B2B side, but we wanted to give a message to the entire mutual fund distribution community also that if somebody who is looking for aligning their interests with the larger platform, then Prudent is ready to absorb them from the point of business continuity and service continuity to their customer and absorbing the existing talent pool. So I think overall, it's a very good mix for both of us, for Indus as well as Prudent. And another important thing is that I think Sanjay Sanghvi will remain as a core advisor to our organization as a strategic advisor.
All right. The couple of factors that the street likes is the MF AUM per client is substantially higher for the business that you're acquiring in comparison to the core business. And also the acquisition, I think, is done at low teens, in comparison to the multiple that the company is trading at. So I think those are the two big numbers. Give us a few more details. Any kind of debt you'll be taking on board, employees, integration, synergy benefits, if you could quantify it?
Yeah, so I think, Nigel, we have been sitting on a significant cash. If I'm talking about currently, company has 600 crore of cash on hand. And it's an all cash deal. May not be 100% money is going at in a one tranche now. So I think we'll be giving about 85 crore now, and rest of the amount will go in next 3 years' time or after 3 years. So the company is not required to borrow anything. Everything is available on the books. As far as synergy is concerned, as I told you, Mr. Sanghvi has positioned himself as a mutual fund expert, and he was selling only and only mutual funds to their customers. customers. So we got a very strong, loyal client base. However, as we all understand that customers' needs are now changing dramatically. So I think the biggest opportunity which we will have would be the cross-selling with the help of their existing 15 loyal team members headed by existing CEO called Mr. Gaurav Gupta. So I think the using our technology platform, our brand, our support, our research, and the multiple product will definitely help us significantly. On the EPS side, it's definitely strongly cash EPS accretive because I think we are investing roughly about 120 crore, but I assume we'll have a cash EPS of about 13-14 crore. However, if you look at the reported profit, because these 120 crore need to be amortized over a period of 10 years, you may not see significant uptick on the reported profit because you might earn 15 crore by way of profit before tax, but 12 crore will probably amortize over a period of 10 years. But overall, it's a win-win situation.
Sanjay, great to speak with you, Prashant here. And we talk about mutual fund companies, we talk about broking companies, we talk about all other companies. But your business has been, as Nigel also pointed out, a true sort of wealth creator. And we don't talk often enough, but that is only because you don't join us often enough. So I hope that this is the start of many. I had a couple of fundamental questions, right? I mean, beyond this acquisition. I was having this discussion with a friend. For a business like yours, where more and more new investors, right, money is coming in, pouring in terms of every month we get that data. How much of that is coming through? Is the share of direct going higher, Sanjay? And how should one think about that? Is that a risk? Because on the set of the clients that you have, I mean, that of course is sticky money in that sense, right? And you will continue to earn a trail. But on new investments which are coming in from new investors, etc., how much is direct and is that a risk?
Prashant, I think we believe market is poised for a significant growth, and both, whether you talk about the direct or you talk about the advisor-led business, both the business will grow significantly. However, if you look at when we look at our growth, we always look at are we able to capture the market share in the regular piece of the market, because we do not address the direct piece of the market. In case of direct, Prashant, we need to always keep in mind that all direct is not DIY. They have been either supported by the some RIA or some PMS guy would be using the direct money. So there is a inbuilt advisory cost which is also involved. So if you look at average cost of servicing customer is about 30, 40, 50 basis points in the direct side, and what we earn is roughly about 80-90 basis points. So I don't think there is a huge difference between two. However, we believe that today country has hardly about 5.5 crore investors, and this number can easily double. On ground, number of advisors are very, very, very less. Hardly about 175,000 people are there to advise. Compared to that, if you look at the insurance industry, only POS number is more than 25 lakhs. So I believe that is a huge scope, and as long as you are able to capture your target segment, which is a regular plan, they'll be very, very happy.
So steady state 15-20% kind of growth visibility is there, Sanjay, for your business?
Yeah, because Prashant, we have roughly about 1,060 crore AUM as of 1,060 crore of SIP against a total AUM of about 117,000 crore. So Salana हमारे पास करीबन roughly about 10 to 12% I collect by way of SIP, and if you assume about 10% by way of mark to market, so I think 18 से 20% growth on the AUM side and similar growth on the revenue side can be easily assumed without keeping in mind the market volatility, because
without the extra, so that's a very decent, nice breakup. So 12% SIP and then 10% mark to market. So that gets you 20% clean kind of growth visibility for from here. So that is well understood. So just one more thing. There are financial innovation is also starting, right? For example, this new product which is the SIF, 10 lakh investment. From what I understand from AMCs, etc., is that distributors are, I mean, they're also, that entire machine will start. I mean, distributors have to be trained about the product for them to be able to sell and distribute, etc. Will all this also be, and this product specifically also be a big growth driver according to you? Will Prudent be doing this?
Yes, so if you look at Prashant, for us, we probably, as we told you, in the 120,000 crore of AUM which we manage, I think the average AUM per investor is roughly about 6.5 lakh rupees. So मेरा मानना है कि my customer base doesn't have an appetite significantly to buy the PMS AIF, but this 10 lakh rupees product is significantly better for us. And I can tell you we have been doing a lot of efforts to, I think, certify our advisors to get the SIF. Today, country has about 500 plus people who have certified as got the SIF license. I think 160 is by us only. So we've been doing a lot of efforts there. And I think next year is going to be a huge driver in this segment, the SIF segment.
Yeah. I know some launches are happening. Sanjay, I've been listening to the whole conversation as someone who covers personal finance. It's been really good listening into you because you and, of course, the other distributors, the whole fraternity has done a great service as well. And the fact that it can be a profitable business, it's really a win-win. So it is quite heartening. Just want to understand the margins and how they will shape up from here on. The entity that you've bought, that has higher margins than the margins at which you're operating. And now as the product mix evolves, abhi aap SIF mein jayenge, that's 10 lakh rupees ticket size, and it's more nuanced. It is for more nuanced customers. And I'm sure even the industry will push it in a big way. So I'm sure even the commissions there will be probably better. Not sure if the structure of those commissions has been laid out or not, but I think it'll be trailed pretty much how it's been for mutual funds. So as all of this evolves, what will the margin profile of your business look like over the next year or two?
Overall, if you look at last 2 years, we have some pressure on the remuneration side to my team. So I think the operating expenditure on the salary was a little bit of elevated in nature, which might continue for a year or so. However, operating leverage will be significantly in our favor going forward. Coming to the margin, I don't think that the overall top line will now probably plateau. So today, currently, we have a, let's say, yield of about 90 basis points. I assume that with 1 or 2 basis points here and there, I think the top line should get stabilized and my operating margin gradually should improve. So overall, it's a conducive environment as far as I don't think there is a significant deterioration which will happen, but the improvement will be definitely visible. If you talk about
So if you say improvement in the margin, if we, and this is what our colleagues have been telling us, let's say if we talk PBT margin, then what you acquired, this company, Indus Capital, it's operating at 70%, not sure how. You are closer to 25%. So pick any metric, whether you want to talk EBITDA margin, operating margin, PBT margin, and give us, again, the trajectory from where you are at today. How will it improve? I mean, to what level, over how many quarters?
I think you need to look at both the business separately. We are purely into a B2B where we have 34,000 mutual distributors who work with us and they are all into a variable model and we share roughly about 65 to 67% of our revenue with them. While this is the B2C business.
B2C, so higher margins.
There you already have the employees who manages the business and there is a definitely very high revenue sharing with them. So if you look at Prudent, originally started as B2C, we have roughly about 10,000 crore in 120,000 crore which we are managing as a B2C, and this 2,000 crore is added into B2C, which is a high margin for us also.
Okay, so blended company margin, that's what I'm trying to ask. Blended margins for your company, from where they are today, let's say 4-5 quarters down the line, where will they be? If you can share that number.
I haven't worked on that, frankly, because I think yesterday only we announced. So I think blended margin I haven't worked on, but I think it might be a little bit improvement will be visible on the consolidated level.
All right, Sanjay, very quickly, before we let you go, just to clear the air, the entity that you're acquiring is not coming with any debt, right? Because you're just trying, you've got a very, very good valuation. That's why I'm asking you.
No, I think the mutual fund business, it's a business without any working capital requirement.
Cool. No, just wanted to...
No liability, no issue.
No, yeah, Renav's team just wanted to confirm that point number one. Point number two, your market share in the monthly SIP, it's hovering around the 3.5%. Where is it headed? What's the target you have on that number?
I think we would like to maintain the 3.5% of the total because in the total segment, the direct piece is gradually increasing. So if you look at without direct, in the regular piece, my margin has improved from 4.5% to now 5.25%. And I want to maintain 5 to 5.5% in the regular piece and 3.5% of the total piece.
All right. And for those that were not informed, the reason I started the interview by complimenting Sanjay is because, in June 2025, he gifted around 44 crores worth of shares to 650 odd employees and household staff. So for those who are not informed, that's the reason why we said good acquisition for your shareholders and, taking care of your employees as well. Thumbs up. Looking forward to chatting up with you soon.
Sanjay, come back more often. Thank you very much. Good luck.
Thank you.
So that is Prudent with perspective. We take a quick... all right, I think what we'll do is we'll go across to Vinay Rajani with a quick view on markets and what's happening, the price action so far, right? So holding up 76 points, 24,850. Vinay, what do you have and what would you trade?
Yeah, good morning. So setup is quite strong. Broader markets have been performing well, though we have been underperforming the Asian markets. As we can see, Korea market is near to its all-time high, and US markets are performing well. In fact, Hang Seng is at 4 years high. So global setup is good. The dollar index is under control. Crude is under control. Only thing is that we need a breakout above 25,000, which is a very strong hurdle. So above which we can expect a short covering by the FIs in the index future. So currently we can say that Nifty is currently into a consolidation phase, but bias is positive, sector specific, stock specific bullishness is there, and in the long side we can keep a stop loss at 24,700. that should be on the trailing basis. So yes, bias is positive, selected stocks are performing well, so with the stop loss one can remain long, and stop loss should be 24,700, and above 25,000 we can see a sharp short covering, and that short covering could take Nifty towards the next resistance on 25,500. The stock specific, I see strength building in Adani Ports after a long time. So Adani Port can be traded long around 1367. I would recommend a stop loss at 1348. On the upside, I am expecting a target of 1400. Second pick I would take from the Devyani International. So this stock has given a nice breakout and has been resilient in the downfall in the previous downfall. So Devyani International can be traded long around 183. Stop loss I would suggest at 178, and around 192 should be the target for next couple of sessions. So Adani Port and Devyani International on the long side.
Okay. All right. Thank you very much for that. By the way, you just saw some visuals there, Prime Minister Modi, and I think I saw a glimpse of Mr. Rajnath Singh, Raksha Mantri. I'm not sure. I think there were some other visuals there as well. That was the elections for the vice president, where voting is taking place right now. Votes are being cast. And that's what the visual depicted. For the timing, let's talk about some stocks which are on the move. And one of them is definitely RailTel. RailTel is up 6%. The company's won an order. Let's find out more. Vinny, tell us more. 6% is a decent move.
Absolutely, because they have around 5-6 order wins that have come in, valuing overall total value is around 700 crore rupees. Now, this order is actually come in, these individual orders or letter of acceptances that the company has got is from the state project director of Bihar Education Project Council. Now, there are different orders that are there in this, like I mentioned, right? So, among that, the two big ones, one is an order related to procurement, supply, installation of smart classrooms at the government middle school, which is valuing around 262 crores. Another one is also similar, procurement, supply and installation of smart classrooms at government secondary school and middle school as well. That is of around 257 crores. And then there are smaller orders and ancillary orders related to this as well. So overall, 700 crores order win. That's why the stock is buzzing in trade.
All right. By the way, prime focus at the bottom of the screen, right? 1% equity changed hands once again. It was, by the way, it came out of circuit for a while. It was up 7%, 7.5%, but it's limit up once again. So about 192, 30% Friday, Monday, and today, 30% on it for now. Now, IT is what we want to focus on, right? I mean, Friday was bad, yesterday was poor, but there's a bit of a rebound on the back of that Infi buyback announcement. Rima is here with details. Rima.
Thanks so much for that. So first, the news. Infosys board will be mulling a buyback on the 11th of September. That's got the stock excited. So after a 20% decline so far this year, the stock is up close to about 3.5%. This would be the company's fifth buyback since 1993. Now, a buyback or any form of a capital return always signals confidence that the promoters believe perhaps the share price at this level may be undervalued or fairly valued. Morgan Stanley, the next question is how large could the buyback be? The last three buybacks were in the range of about 9,000 crore rupees. They were open market buybacks. But remember, from 1st of April 2025, open market buybacks are disallowed. So this time it's got to be a tender buyback. Morgan Stanley says that we see the potential for a 10,000 to 14,000 crore of a buyback. Historically, buyback premium has been about 18 to 25% from where the stock was before, and the total buyback size, to their mind, could be about 1.3 to 2%. The next question is, because the entire IT space is active, who else is eligible for a buyback? Well, of all the large 5 IT companies which are a part of the Nifty, it's only Infosys, Wipro and TCS which have been pretty regular with their buyback. HCL Tech and Tech Mahindra not so. So, HCL has only done 2 buybacks in their history, Tech Mahindra only 1. So the other 2, that's TCS and Wipro, both completed their previous buyback more than a year ago. So the street is saying now it's time for them perhaps to come out and announce a buyback. Back to you.
All right. Thanks very much, Rima, for that. So that's Infi for you on the back of that buyback announcement. We'll take a quick break here. On the other side, Manisha focuses on commodities. So stay tuned. Coming up.
Welcome back. So the equity market is having an okay morning, not too bad. But let's find out what's hot in commodities. We have Manisha with the latest. Manisha, what's top of mind for you?
Well, I'm looking at soft commodities right now, shifting focus because, you're looking at gold prices making all-time highs every day. Silver is surging higher. Metals are doing very well as well. But what is not doing so well really is some of these soft commodities. So I'll take you through 4 or 5 of them. I'll start with cotton because the prices here have constantly declined. There is higher availability that we are working with right now. So when you look at the Indian markets, we are looking at stronger numbers in sense of crop, and then 11% duties done away with. So imports also are going to be on the stronger side. And it's not just about India. Brazil, Texas, these are the other major cotton producers, also are looking at a strong cotton crop going forward. So cotton not doing well in 2025 till time. The other one to watch out for is rice now. Remember, India has had very strong rice crop in the last seasons, and this season also is expected to be a record number. And then there are inventories which are much higher. And then export numbers are not so good as well. That is because the international rice availability is quite strong. High production in Thailand as well seems to be weighing on to the markets. And this is the USDA report which says that in 2025, the global production is expected to reach a record 543 million tons. So India, Thailand, global rice numbers are very huge is the reason. It's a 5-year low in the international markets and a 3-year lows for the Indian markets as well. The other one on your screen is soybean. Here as well, Brazil is set for a record soybean production. So is US, and that is what is weighing on to the markets. And even as there are some biofuel mandates, even despite that, markets are looking at constant pressure coming in for this one. Brazil is set for a record crop, and then you're looking at China, soybean stocks as well, much on the higher side. 6.8 million ton on what Chinese stocks are is at a March high for this one. Cacao should come in on your screen because that one is trading at a 10-month lows. We did see all-time highs in 23, even 24 was a volatile year, but 25 has seen profit taking. So $7,000 a ton is how cocoa seems to be trading at. There are improvement in supplies from West Africa. Ecuador could surpass Ghana as the world's second largest producer with the kind of numbers that we are looking at. So higher production is the constant impact that we've seen coming from the higher prices as well. And finally, I want to talk about sugar because we're looking at a 4-year lows in the international markets for this one as well. So the raw sugar prices have continued to decline. There is expectation of ample supplies, and then the fund selling pressure also has been on the higher side. And then you're looking at higher production from the top producer, Brazil. India is looking at an 18% jump in sense of sugar production for the coming season. And Thailand, the third largest producer, also is looking at very, very strong numbers. I want to leave you with the final plate which tells you on how many of these international agriculture commodities have done in 2025. So you have wheat prices down 9%, cotton is declined by 5.5%, rice is down by 19%. As I said, 5-year lows coming in for that one. And then other commodities like sugar is down 19%, second straight year of decline for sugar. Cacao is down 38%, and you have seen rubber prices decline quite sharply as well.
Okay, all right. Yeah, for the traders, maybe not such great news, but for consumers, those declines perhaps look good. Lesser inflation. Thank you so much for joining in, Manisha, with that quick analysis. We'll take a break on that note, come back on the other side, and it'll be time for a special segment, It's the Economy. Today, Lata discusses the outlook for banks and NBFCs after the recent tax cuts. Suresh Ganapathy of Macquarie Capital will join in.